Financial reporting is the disclosure of financial results and interrelated to both management and external shareholders, such as customers, investors, regulators, among others, about how firm is performing over a specific time period. The key objective of financial reporting is basically to analyze, track, and report the business income. In most cases, the aim of reports is to assess resources usage, business performance, cash flow, and financial healthy companies. The conceptual framework lists the primary user of financial statement as one of the primary users of financial reports is the investor. Investors will likely need financial statements as they are the owner of the businesses and need to understand the investment performance. Another user is the company management, who needs the financial statement so as to understand the liquidity, profitability, and the cash flow of the business each period, so that they can make both financing and operational decisions about the firm. Additionally, customers need the financial statement, since when they are considering the type of supplier to choose for a major contract, reviewing company financial reports is vital so as to judge the financial ability of suppliers to remain in business long enough to offer the service and goods mandated in the contract. Financial reports are grouped into the income statement, balance sheet, statement of changes in cash flow, and the statement of changes in equity. The main purpose of the statement of profit and loss is to summarize the revenue, expenses, and costs incurred in a fixed time period, while the statement of financial position is most used to examine the position of a firm in terms of financial stability and potential risk. The statement is likely to incorporate a snapshot of business liability, assets, and shareholders' equity. On the other hand, a statement of changes in equity explains the changes in firm share capital, reserves, accumulated, and returns profits over a particular reporting period, while the statement of cash flow, the main purpose is to present data about cash receipts, cash payments, and the net change in the cash from financing, investment, and operation activities of a business in a particular time period. Luying Corporation Limited is multinational telecommunication firm headquartered in Melbourne, Australia. The company built and operate telecommunication network and market mobile voice, internet access, pay television, and other services and products across Australia. Telstra Corporation Limited was founded in 1975 as a member of S&P 10 and Australia's biggest communication form by market share. The company generated a revenue Australia of 26 billion Australia dollar in FY 2018. Basically, according to 18 financial reports, one of the Telstra Corporation Limited strategic objective is lead the Australian market by simplifying its products and services so as to enhance consumers' experience. Additionally, the company is working to establish a standalone infrastructure business until that will help in driving performance and offer future optionality to empower people and serve customers effectively. According to the 2018 financial report, the major highlights of the company was based on financial performance. The total income increased by 3% from 26 billion in FY 2017 to 29 billion in FY 2018, while the net profit after the tax was down by 8.9% to 3.5 billion, which was probably as a result of an increase in operational costs. The company also launched second-generation TVs, bringing together free-to-air, pay TV, and on-demand streaming, enable the company to increase its customers to 2.3 million. Furthermore, Telstra Corporation Limited reduced our greenhouse gas emission intensity by 24% from FY 2017, which is a significant step in ensuring a clean environment in terms of sustainability. Of sustainable development goals in a company acts as a blueprint to achieve a better and more sustainable future for all. Often, SDG addresses the global challenge that is faced. According to 2018 financial reports, the two goals that the company has achieved general equality priority goal as a contribution to the UN SDG. Additional, Telstra Corporation Limited has achieved a climate action plan. The company has played a key role in addressing climate changes, and during the year is reduced the carbon intensity by 55% from the baseline of FY 2017. Of the business risks that could affect the financial performance of the company in the future is economic risks, which is a condition in the economy that might need an increase in operating costs or a reduction in sales. Another risk is a convenience risk. In this case, the company might break regulations or law despite fully intending to follow the law. It might end up violating this law due to errors or oversight. Based on the company's financial statement for 2018, there is a significant decrease in terms of profit. The net profit decreased from 3,874 in FY 2017 to 3,529 in FY 2018, which is attributable to increase in the cost of operations, the main source of incurring of service, sale of goods, and contracts. However, the largest expense for the company is service contracts and other arguments in addition to the cost of goods sold. The cost from the service contracts is basically related to the amount incurred in order to secure the contract. The cost of goods sold, on the other hand, relates to the direct costs of making goods and service sold or provided by the company. Over from the cash flow statement, it is evident that the cash and cash equivalent experienced a significant drop. The item moved from 936 in FY 2017 to 620 in FY 2018. This was a result of a decrease in cash at bank and on hand from 2012 to 129 in FY 2017 and 2018, respectively. The bank deposits demonstrates an increase in the net assets from 14,516 in FY 2017 to 50,014 in FY 2018. This aspect has been attributed to increased returned profit from this year. The most significant asset in this case is the return profit generated during the two financial periods. The increase in revenue from the year basically enabled the company to experience an increased total assets. Moreover, the company made further investment in FY 2018, which in this case enabled it to increase its total assets significantly. Telstra company property, plant and equipment was 21,315 in FY 2017, which increasing to 22,108 in FY 2018. This has been attributed to the massive investment done by the company during this year. According to the financial statement, the company PPE compares land and site improvement, buildings, communication assets, and other plant equipment and motor vehicles. In F1 2017, the company made an improvement its assets and made an addition of 3,714 worth of assets, which enable the business to increase its revenue. The increase in net profits is as a result that the management effectively utilized the company assets to generate more revenue. Additionally, the final statement revealed that the most significant liability during the year is derivative financial liabilities, which basically decreased from 42 million to 1 million. This aspect demonstrates that there is a positive improvement in the company, which enables the business management to effectively utilize its earnings to fund some of its investment. This is because it is mostly advanced that the company should first attempt to